This video is brought to you by Miclay, the innovative British fashion brand that donates a portion of its sales to charities that aim to improve our planet and environment. Find out more in the link below at www.miclay.co.uk. Thank you, Miclay. This is the Eurozone, or officially Euro area, a monetary union spanning across Europe from Portugal in the west to Cyprus in the east. Home to 19 member states and 342 million people, it is one of the largest and most influential economies in the world. But just how important is this collection of European nations? Does the Eurozone hold its ground when compared to the world's economic juggernauts? And does this complex mix of different nations within one monetary union cause more suffering than good? Well, in order to find out the answer to those questions, we must first start with the history. Welcome to the economy of the Eurozone. Now, the path to a single monetary union that links much of Europe into a state of interdependence is long, controversial, and political. And it's also not the first time parts of Europe have attempted to unify monetarily. So we'll do our best to keep it short, stating that the history behind today's euro is somehow a result of war and geoeconomics. You see, back when the idea of the European Union was being thought up and developed in the decades following the Second World War, the core objective of many European leaders of the time was to maintain the newfound peace on the continent. And in order to achieve their goal, a push towards European cooperation was deemed necessary. The idea being that if you get nations to trade and share their institutions, then they are less likely to go to war. And the euro then was one of the major symbolic actions to take place in this phase of European cooperation, with hopes that it would increase inter-European trade. Furthermore, the euro was also the European Union's response to a dominant US dollar, aiming to be a currency that reduced US influence on the continent by putting that influence in the hands of Europeans. So, by 1992, the euro was established by the provisions in the Maastricht Treaty, although the term euro itself, as the name of the currency to be used in this monetary union, was only officially adopted in Madrid in 1995, thanks to a Belgian teacher. Anyway, a few years later, on the 1st of January 1999, the euro was officially introduced. Not physically though. You see, what happened was that all the national currencies of the member states of the Eurozone ceased to exist independently, and instead their exchange rates were fixed against each other. However, the Eurozone didn't reach its current status, whereby a physical form was introduced, until the 1st of January 2002. This is also when the older national currencies ceased to be legal tender. Now, after this complex job of getting multiple national economies to, in some way, shape or form, adopt a new currency over a period of a decade, the collective Eurozone economy did go through a period of impressive economic growth. You see, after the complete adoption of the euro in 2002, the Eurozone managed to keep up with the USA's GDP per capita growth figures, despite the huge monetary change that had just taken place. But there was an issue, because the Eurozone began to grow in an unsustainable way. Its economy was becoming increasingly unbalanced, for multiple reasons. And when the Great Recession swept through the global economy, the Eurozone bubble popped, and its faults were there for everyone to see, and this time they were not covered in healthy-looking GDP numbers to calm the politicians and large parts of the general public. This major recession that took place has scarred the Eurozone and has led to some of its faults to be fixed and many people to have their livelihoods changed, all as a result of this monetary union. And this leads us to the Eurozone today, almost a decade or so after its sovereign debt crisis. So, what is the Eurozone like today? Does it still have a commanding voice in the global economy? And has it finally emerged from its economic slump? So, the Eurozone's economy is big. $14 trillion big. For context, that's more than twice Japan's economy, or more than 4 times larger than the UK's. But despite the fact that its economy is often grouped into one when in the media, the Eurozone is a mixture of various different national economies, currently 19, that often have different national policies, regulations, and talent available to them. And with a GDP per capita of around $42,000, the Eurozone therefore ranks as a highly developed economy and is home to about 15% of global GDP. But by virtue of being a large, populous and relatively new economic bloc, the Eurozone has a big economic divide within its borders, with richer nations located in its west and north, like the Netherlands, Germany and France, and poorer nations located in the south and east, like the Baltic states, Greece and Slovakia. This economic divide has been both a curse and blessing to businesses and countries across the euro area, as it has facilitated certain jobs to move out of richer parts of the Eurozone towards poorer parts. While at the same time, monetary integration has led to a mass underestimation of risk associated with lending to less stable members of the euro area, creating and compounding bubbles that grew in the lead up to the Eurozone sovereign debt crisis, and I will leave that topic for a whole other video. But a key characteristic to be aware of when talking about the Eurozone is that it's a significant global creditor to the world economy, despite being home to many little good consumers. You see, since 2012, it's had a current account surplus which has even hovered north of 3% annually for the last 5 years, meaning that as a bloc, it's held larger surpluses than China's large, impressive, and for the most part, export-orientated economy. So, with the basics outlined, let's dive a little deeper and try to understand in more detail the pros and cons of this economic cooperation. What are its advantages and disadvantages for its members? Okay, so before I go on telling you why the Eurozone makes sense while simultaneously being a disaster, I'm going to need you to be aware that many of these advantages and disadvantages continue to be debated today, as they were before the introduction of the currency. So just keep that in mind. Awesome. So let's start off by talking about the positive side of the euro, starting with the increased stability for businesses that come with nations sharing the same currency. As you know, many businesses within a country will not only do trade within the boundaries of their own nation, but rather they'll trade with other nations. For most businesses around the world, that means having to deal with the volatility in the exchange rate of their home currency, as well as the currency of the nation with which they are trading, or the US dollar. Now, this fluctuation in exchange rates causes uncertainty for firms, as the profit margin that they have for selling a product or service in one country could be eaten up by the appreciation or devaluation of a single currency. The euro has been able to eliminate this uncertainty for businesses of all members of the Eurozone which look to trade with one another, which in turn encourages the members of the Union to do even more trade. Another advantage linked to the reduction of uncertainty is the reduced transaction costs that are associated with trading with countries that share the euro. Since businesses, tourists and all those in between no longer have to purchase another currency for a fee. The age of using the Deutsche Mark to purchase Italian lira to go to visit the beautiful Amalfi Coast is long gone. But unfortunately, reduced costs and greater efficiency from the removal of currency-related barriers is not a one-way street. Far from it. there are plenty of disadvantages as a result of using the euro as well, and we'll start with perhaps the largest of these issues: surrendering monetary sovereignty. So, in order to explain, let's think about the United States of America, your favorite country with 50 stars on its flag. Now, the US has its own currency, the US dollar, and it's also home to its own central bank, the Federal Reserve, or the Fed, as us cool kids say. Now, the Fed is the institution that alters the supply of money within the US economy by raising or lowering interest rates. But not only that, the Fed can also stimulate the US economy by buying government bonds in a process known as quantitative easing. These two levers, the setting of interest rates and quantitative easing, are two commonly used monetary policies that aim to keep the US economy moving forward by helping bring inflation up to its desired rate or encouraging the additional hiring within an economy. Now, let's rewind to pre-Euro Europe, when each member had its own currency with its own central bank, setting its monetary policy that was adjusted to the more specific situation that was being experienced in each country. Once every country joined the euro, this decision-making that was conducted by various national banks with different degrees of independence from their respective governments vanished. Instead, it was replaced by the European Central Bank, or ECB, again, for us cool kids. The ECB, currently based in Frankfurt, Germany, has assumed an impossible task: to set the monetary policy for a diverse group of 19 member nations. What interest rates may be needed in Italy may not be needed in Germany, and therefore anger is almost guaranteed to be experienced by members of the euro area, as a different member within the union will at some point be asking for the opposite monetary policy. This is a big drawback and is often cited as the largest disadvantage of using the euro, since its solutions are beyond the political realities of the Eurozone. But it's not the only disadvantage. Another problem with the euro is the bias that exists towards Germany. Now, admittedly, this can be a politically hot topic, but hear me out. During the first stage of euro adoption, as mentioned at the beginning of the video, countries that aspired to join the Eurozone had to fix their exchange rates to the incoming euro. Now, this rate was influenced most by the largest economy within the Union, Germany's. And given that Germany's Deutsche Mark was a relatively strong currency within Europe upon the adoption of the euro, this in effect meant that Germany had joined into a monetary union that had caused other nations to work with a currency that is more expensive than their own, which means significant changes to their economy needed to take place. While, as far as Germany was concerned, the accession into the monetary union meant that the appreciation of the euro was less likely than the appreciation of its previous Deutsche Mark, since other weaker economies were helping to weaken the euro. This may sound a little too much, but people were aware of this possibility before the adoption of the euro. In the United Kingdom, Dennis Healey, the finance minister, back in 1979 brought up this very concern as a motive not to join the European exchange rate mechanism. But the adoption of the euro went ahead, and in addition to a currency that was far too strong for the Italian and Greek economies, many Europeans had to deal with ECB monetary policy that kept the largest economy in business, as well as economies with similar economic realities. But there you go. The Eurozone is an economy that benefits from its uniformity as much as it suffers from its flaws. But ultimately, it remains a significant economic union that's trade spans the globe. So there you go, the economy of the Eurozone. I'd expect it to continue to be an innovative part of the globe, with a continuously shrinking share of the global economy, as much of the future economic growth is to be expected in Asia. But even with that said, the Eurozone clearly has its own issues that need fixing. Removing barriers for businesses and political cooperation will be key so that the Eurozone can act and respond with more agility, keeping its economy at the forefront of the global economy. And that may even allow it to become an even more prosperous region. Hi everyone, thank you for watching our latest video. Please hit the like and subscribe button and share this video. The Eurozone is a really interesting part of the global economy, and I will be making more videos about it, addressing some of the issues it has caused and solutions that have been proposed by economists around the world. Hit the bell icon to make sure you don't miss out. Otherwise, take care. Bye.